Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 21st, 2022. As always, please don't forget to hit the like buttons. Your likes and subscription to this channel and shares of this video is what keeps this channel going. And the more likes this video gets, the more people will see it, because that's the way YouTube works. Stocks cleared important resistance, and I'll show you what that resistance is. Further rally is quite likely for stocks. High yield bonds also seem to be bottoming. The Treasury bonds are really truly deeply oversold, and I think and interest rates might drop as a result. Interest rates and bonds move in opposite directions. Same goes for dollar. Seems to be very overextended to the upside, and we'll look at also Japanese yen, which possibly may have bottomed, and as a result of potential dollar weakness, gold and precious metals could benefit. Natural gas prices dropped to the level not seen since November of 2021, so almost a year back. This is despite Putin's aggression in Ukraine. If you're a subscriber, stay tuned. I'm gonna cover a few stocks, not a lot to cover, but I'll explain why to everybody. And if you're not yet a subscriber, then consider signing up by going to the description of this in the video to MasterChartsTrading.com. Sign up for one of the products. I'm going to be using the indicators that are available on that site. This indicators, trading indicators, you can see on this chart, this green, blue, red, and yellow lines. So this is TradingView.com interface, TradingView.com, where I'm hovering. It is available for free. You can open a free TradingView account, and then you can apply various indicators. Like, for example, very popular one is EMA, exponential moving average. My indicators are not based on the moving averages, and they are, to my, for me, they're much more useful. So looking at this chart, this is S&P 500 futures. So whenever you're analyzing a chart, make sure to analyze the underlying security. So this is S&P 500 futures. Second best is to analyze a chart of S&P 500 ETF SPY. Now, by no means you should analyze any kind of leveraged securities, like, for example, SPXL. The reason being is that it does not track the price of the underlying because of the way the ETFs are structured, this leveraged or 3 times leveraged ETFs. So when you're analyzing a security and you want to trade a leveraged ETF, once you have analyzed it, always use the underlying. So underlying is the futures. I always like to use the underlying futures, and this is a continuous futures. Symbol on TradingView is ES1 exclamation point. Okay, so looking at this chart, very briefly, we have entered the bear market back in April of this year. How do I know we have entered the bear market? I'm using my indicator lines, and on this chart, if you see, you can see that when we have closed below this yellow support resistance line, where I'm hovering on April 29th of this year, that means we have entered the bear market. From then on, we can do nothing. Like, let's say you are only going to be buying or only going long, and once bear market starts, you do a bear market project. A bear market project is a joke, because basically you do nothing, and bear market project could be you're staying in a deck, or you're building your kitchen, or redecorating, or you go traveling. So bear market project, it just means you're doing nothing, or you can be doing something. So if you're an aggressive trader, you can do the opposite. You can sell short. Okay, so there are opportunities to sell short on a bounce, but where do we find that good level? So good levels to bounce towards when we want to short is this red support resistance line. So once the security closed below this yellow line, we bounce towards the red line, we sell short there. Same goes recent rally, tremendous rally, truly, from June lows into August highs. It was an enormous rally, but still it was a bear market rally because we did roll over. We had two, sell short signals, and we made a new low. So far, we're making a series of lower lows and lower highs. This is a definition of a bear market. Now, recently, obviously, we had a very volatile several weeks. We tried to rally here at the end of September, kind of failed, but then there was this very big, I actually pointed this out last week on Thursday, the 13th of October, last Thursday, I pointed out this big candlestick. So I'm going to turn off the indicators for a second so just you can see it better. So this is a big candlestick. You can see that price have dropped during the day, but actually the price rallied by the end. So you can see that the stick is green. That means the opening is below the close. So this is a classic hammer candlestick. Hammer because it looks like a hammer. So next day we had basically almost a complete reversal on Friday, last Friday. But then this week we had, again, more volatility, but actually the closing of this week, Friday's action is quite positive, quite bullish. Notice that we have cleared this yellow support resistance line, and we have cleared it not only on daily chart. I'm going to look at it on a weekly chart. So this is a weekly chart. Now, again, if you're using my indicators, then when you go to weekly charts, weekly means that each candlestick is 1 week's worth of activity. Where I'm hovering, it says 1 week. You need to change the settings to 52. So click on this little wheel and change the setting to 52. So notice on this chart, we finally have cleared the resistance, and I call this yellow. The yellow line is weak resistance. Strong resistance is at the red line. That's where we want to sell short. And notice that last several opportunities were actually quite successful. You can see it right there in May, and then another one in August, and another one in September. So we did indeed clear this resistance, and the road is now more open towards another bear market rally. So a bear market rally should peter out around the red line. So that's why I'm drawing this line, this dotted line arrow. It's pointing towards this red support resistance level, which is currently, at 3991. Now I drew it, kind of a reasonable shape, so we can expect a rally to last into November, December, if it actually occurs. I have pretty good feeling about this particular latest bounce. It does look quite promising. One of the reasons why I think it's quite promising is that if we look at Dow Jones, this is Dow Jones Industrial Average Futures, symbol on TradingView YM1 exclamation point. So very similar pattern. We were selling short. We were selling it short. Now Dow Jones is actually leading this move higher. Also, we had a hammer candlestick right there on Thursday, October, last Thursday. But this week we actually broke above this previous highs. Previous highs were, very recent previous highs held from early October, and we actually are touching these levels from bottoms from September and late September here. So we're actually approaching this red support resistance line. And notice what happened last time. Dow Jones led the market rally from June into August, and actually we came extremely close to bursting into the bull market, but we tapped out exactly around the blue line. So this selling short opportunities were even strongly supported, more strongly supported because of the way resistance manifested itself around the blue line in August, right here, 16th and 17th of August. So can something similar happen? It does seem that way. Dow Jones is leading the market higher. Notice how close we are to the red support resistance line versus the S&P. We're still a ways off. So also, and then notice how far we're still for NASDAQ. So NASDAQ, tech-heavy NASDAQ, we haven't even gotten to the yellow support resistance line. You see what I'm trying to tell you? So lots of room to run to the upside. That's one way to say it. So I think technology will be playing catch up in this bounce if it happens. And it's reasonable to expect, all of the averages, S&P, Dow Jones, NASDAQ, and Russell 2000 to continue towards the red lines. They're all very similar. They're printing a very similar picture, and eventually, if or when they get to this red support resistance line, we will consider selling them short. So here's the Russell 2000. Slightly different picture, but overall, we were still selling it short. You can see clear downward facing arrows here, opportunities to sell short. Now I think a rally is possible for all indices, and I think we can continue towards at least red support resistance line, which is currently at around 10% higher for the Russell. So let's see what happens in the near term. High yield bonds, junk debt. So junk debt, I always point out the fact that high yield bonds, this is weekly chart of high yield bonds, junk debt, JNK. This lower part here shows the correlations between the high yield bonds and the S&P 500, and by and large it's very positive. So right now junk debt is also very oversold, but it is moving in the right direction together with stocks. So we're most likely going to be expecting a rally to continue. Now, there is no divergence, in other words. If the junk debt, for example, was dropping, but stocks were going higher, then I would be worried. But right now, I don't see a divergence, so it's possible that the rally for stocks will indeed continue higher. Now, some securities are deeply oversold. Here's one. This is Treasury bonds, the long-dated Treasury bonds. So this is TLT. This is 20-plus year Treasury bonds. Understandably so, are in a state of collapse because of the interest rates raises by the Federal Reserve. So as interest rate rises, bonds sell off. The opposite is true. When bonds gain in price, then interest rates will fall. So we traded this Treasury bonds. You can see a huge, it was truly epic. It was a 34% gain. So if you opened your positions back here in March, January, February, even as late as March, you're in great shape. But just the way this thing looks, it looks deeply oversold. This, you can see the way indicators are curving down. The price is so far away from this yellow line, so far away from pretty much everything. I think this gap also, so notice this gap. I'm going to turn off the indicators for a second. So notice that from yesterday, Thursday, into today, Friday, the price gapped down. So does look like it wants to bottom. Looking at the weekly chart, also very oversold level. On the weekly chart, notice this really big red candlestick. it's unusual, and it usually happens at the end of the move. So I think some sort of a at least a relief rally is likely. I mean, look at this, from February as late as March here, you had an opportunity to get in on the downside, and I mean you just really cleaned out. So if I'm right, I think we'll see a move in the opposite direction. The yields obviously are doing the opposite. Here's a 30-year Treasury bond yield went to 4.3 not so long ago, here in March, where the opportunities to sell short the bond funds were. So yield actually doubled. It used to be 2% back here. It used to be a lot lower, even it was like 1.6% here in December of 2021. So yeah, also unsustainable, really low rates, and now we're kind of sort of getting into this overbought territory. I mean, this chart just looks overbought, and especially notice again this gap. So this is a gap up, and usually gaps first of all get filled, and secondly this could be an exhaustion gap. So I'm expecting a move to the at least some sort of a sideways to down move. There's another gap right there between Wednesday, October 4th, and Tuesday, October 4th, and Wednesday, October 5th. So another gap right there. So usually, as they say, all gaps get filled. So it's reasonable to expect a move down for yields. I would say like that much, towards like 3.4 maybe. So let's see what happens. Let's see if I'm correct. I think also dollar. I mean, dollar is truly epic move. This is dollar DXY on the weekly time frame. I sent an alert out back here in July of 2021. We were buying it back here, and notice this. I mean, this is, I call it gigantic move, and it's truly gigantic. This is for a dollar index. It's not even a individual currency, so it's a 23% move for the dollar. So it's huge. I mean, euro is basically on parity. I mean, even less. It's less than $1 per euro. British pound just hit a new low, recently hit a new low. That's like each dollar is a pound, is unheard of. And the one I really wanted to show is USDJPY. So US dollar versus Japanese yen. Also enormous move. Again, if you were able to catch this one, if you got in here in April of 2021, I mean, and you just did nothing. You just held this USD versus JPY security. That is a 40% move. So yeah, and the leveraged nature of forex trading, you can see it's enormous. So this candle, this is a weekly chart, 1 week's worth of activity. This candle sure looks like a shooting star candlestick. On the daily time frame, USDJPY also looks, this is quite a bearish candlestick, especially after this big move. So yeah, it does look, again, first of all, we were overextended to the upside after, again, gigantic move. So I would say that a move towards this blue line at least is reasonable to expect. That's about 7%. The same goes for the dollar index. This is a DXY right here. So a dollar index could easily move around 4% down, towards the blue line. At that point, we'll make a decision: do we want to keep buying it, or do we want to do nothing at this point? Because maybe this is a reversal. It's possible. It's entirely possible. So we'll be watching for what's happening with the dollar very carefully. The reason being, again, is because we trade gold. So Here is XAU USD, gold divided by US dollar. This currency pair, this is a currency pair. So when we trade this currency pair, we think, okay, gold is constant, we divide it by US dollar. If the US dollar is very strong, it's pulling this currency pair lower. If the dollar is weakening, then this currency pair will rise. So we're looking at gold versus US dollar. We were selling it short. Notice the downward facing arrows very recently, back in June, even May here, and it made a pretty nice move to the downside. Now it seems like we're bottoming here. So we have like this low from the September lows, and today also a very promising looking candle, and it's exactly at around previous support, which is around September lows, and we're kind of trying to bottom here. So it's not unreasonable to expect a rally, at least towards the red line, which is around 8% up. So I'm thinking 1785 is a reasonable upside target for gold in the next few weeks to month, unless of course we just collapse through these lows. So all eyes to the dollar, especially Japanese yen versus the dollar. It's important to watch this currency pairs if you trade gold. And I wanted to highlight a trade we did recently. This is natural gas. So natural gas is not for the faint of heart. It's a very difficult security to trade. However, sometimes it's very rewarding. Here's natural gas futures. Again, don't analyze UNG. UNG it slips. There is slippage. So yes, it closed below this red line, but you need to look at the actual underlying. So natural gas futures, much better security to be watching. So the way we trade natural gas is the way we trade Forex. Whenever we close above the blue line, we simply buy it there. Whenever we close below the red line, we simply short it there. So opportunity to sell short right there on the 18th of October. We got our target today, so target was not that far off. So at this point you need to basically, this is the way we trade, then we move the stop to entry, possibly take some profits here. But the important thing is this is natural gas, right? And natural gas, you know, if you are following the news, it's a big deal because Russia is threatening Europe and the rest of the world with various things, like they're gonna come begging to us because they're gonna be freezing to death. And then they most likely, Russian special forces blew up the Nord Stream pipeline. It hasn't been proven yet, but I mean, who else would blow it up? So the price of natural gas has been dropping as a result. This is a weekly chart. It topped out here in August and has been doing nothing but dropping in the last few weeks, few months actually. So this price today is at 4951. Notice that this is the same price as we saw in November of last year. All right. So this is just something to think about, is that maybe all of those threats are empty. Maybe Europe and the rest of the world is not as dependent on Russian dominance in energy markets, and maybe we just need to basically ignore what they're saying and move on with our lives, because the way Russian Federation is acting is simply as a bully and as a just a bad actor. So this is a optimistic note. Energy prices are dropping. I think this is important for Europe and for the rest of the world. If you're interested in what I have to say, head over to MasterChartsTrading.com. I have two products and two combination of products. So trading indicators are these lines in the chart. You can have them on your chart on TradingView.com. They're basically very easy way to trade anything from stocks to forex to commodities to futures, and you can have them on your chart, and it's only $29.95 per month. The newsletters, you can have that as well. I send out daily alerts on various stocks that we trade. For example, this week we'll be looking at various stocks that are listed here: McDonald's, Pepsi, Travelers, Revlon, Schlumberger, Twitter, etc. And the best deal, of course, is to get both trading indicators and newsletter as a package deal, $59.95 per month. I think it's the best deal, so sign up for that. If you want VIP access, you can have also one-on-one training sessions. Right, that's it for this week's recap. If you have any questions, please let me know. Thank you for watching, and have another great trading week. Bye-bye.